Let's look through it. Let's go to our market panel, see what they think about this. We have Larry Shover. He's in the pits of the CME. Drew Canale tells us why a debt deal is already priced into the market. And Stephen Hammers says the fiscal cliff is Y2K all over again. I want to start with Stephen here because Stephen's been looking at Green Mountain for a long time. I guess you have it in one of your portfolios, but is it too hot to handle? Even though it is popping after hours as a result of these earnings, it is a very hot stock to hold, is it not?
Do have consistent earnings, otherwise we wouldn't have it. But because we weight securities based on their risk, we equalize the risk. Green Mountain Coffee, because of its volatility, actually has the lowest exposure to our portfolio, our large cap fund, which is only a 0.03% exposure. So we don't have much of Green Mountain Coffee. But it is consistent earnings.
Okay. The trade action of the day, Larry, it looked pretty ugly today, but yet there were some really good winners, a couple of 52-week highs. Nonetheless, I like how you put this. You said there are nuisance headlines coming through, and a couple of them came in the form of, in essence, I guess it's coming out of D.C., that the talks have stalled as it pertains to the fiscal cliff. Is that what constitutes a nuisance headline that just caused the markets to dive?
Yeah, I think so. I mean, I feel like I'm standing in the wrong line, as it were, the wrong checkout line. I mean, the market continues to shrug its shoulders over these things. We have the incorrigible teenagers in Washington who just cannot figure this out right now. It's pretty simple. Taxes and spending. They want to make headlines, and I think the market's becoming a little bit fed up with it right now, and that's why we're seeing the action behind me, and we'll probably see more of it tomorrow.
All right. Well, but Drew Canale.
Here we go. S&P futures are closing right now. Larry Shover at the CME, how does it look?
Well, it looks like it's a convictionless market, but you know, it's eerily close to what happened 16 months ago. Keep in mind, right now, people are being lulled to sleep and thinking that this fiscal cliff will get figured out. Just like 16 months ago, we would never lose our credit rating, and guess what? We did. So
yeah,
I wouldn't be so careful to
Larry.
think.
Everything was fine.
We didn't die, but we did fall off a cliff 16 months ago. I'm saying that we just can't be lulled to sleep into thinking that this will get figured out. Yeah. I'm hoping it does. The markets are pricing it in, but they priced it in back 16 months ago.
It's very dicey at the moment. It is a very dicey situation. Thank you, Larry.
Very dicey.